Hey, it's Lane. This is episode 358 of the Orange Pill Investor. And just going to jump in and take a look at how everything is doing. Just a little daily account check. And I'm glad to see that a couple of my positions will be upside down. Not too many, but we'll see. Actually, a real quick note. So I love to zoom out. I don't I don't know that it makes me feel too much better, but it is nice to see how well the assets are doing long term versus short. And really, this is nothing to be like surprised by. So even in 2020, 2021, we had the pump to 60. And I can't remember if this was FTX or I can't remember what the hell happened here. No, I'm sorry. This was, yeah, I think something happened that interrupted this bull market. But, 60 down to 34. That's almost 50%, right? So these drawdowns in a bull market are pretty pretty routine. And it's wild though that I think like back here somewhere, I think somebody conceded a bet and like Josh was calling 84K by March 14th or something. So um but does that mean the bottom is in, right? Like, he called it and now okay, cool. It can't go any lower than this. Well, I'm not a TA uh, expert or anything, but this pump that started really in September, we got the bottom at 54, and there was no significant drawdown really until we got to 106. So that's a double. It took September, October, November, December, 3 months to get there. So some type of correction after a double seems pretty reasonable. And to lose, like half of it, right? You double and then lose half. That makes sense. So to to lose half of the pump from 55 to 105 is 50 grand. 25 of it would put us back down to like 80. So, a flash crash down to 72 still wouldn't be like shocking. It wouldn't be like, oh my God, the bull market's over because we saw a flash crash overnight to 72 or something. I hope 84 is the bottom, but I'm not just gonna YOLO on long calls expiring next week because I'm expecting, or even like, I think Josh is still sticking with his 314 prediction. That's maybe when we'll get the diving board pump. Um, but like, doesn't have to be exact. So I don't mind front running the next rally a little bit now. If I'm a couple weeks early, I'm totally fine with that. Or even if there's another 3 weeks of short-term pain before we get the rally, or 6 weeks of short-term pain before we get the rally, I'm kind of okay with that. As long as we get another rally before the end of 2025, I am I will be a happy man. So with that being said, let me just take a look here. Then you says MSR holding up real well. Yeah, holding up at 250. So I am loving that. But if Bitcoin drops another 10, 20%, then we could be seeing 200, 225 prices. Um, but for now, I mean, for the rest of 2025, I'm basically assuming that every dip is a buy. So, with that being said, we were at 300 a week ago. So this is what, 20%, 15 to 20% fire sale. So what I may do is sell another 200 shares and buy leverage with it. I don't really want to go under 1,000 shares because that's kind of my backup plan. If all of my, if every single long call that I had went to zero, which would be tragic, I think I could probably still make things work with 1,000 shares. So maybe I'll just take a look at everything and maybe I'll peel off 100 shares now. And then if we get to 225 or something, I'll peel off the final 100 shares. But hopefully that doesn't happen. We'll see. So yeah, so I did sell some 250s. I think the price was like 245 or 247 maybe when I sold these just yesterday. Um, or was that the day before? I think it was yesterday. And so a little bit upside down on these, which is totally fine. I'll be happy. No matter how in the money these expire, I'll be more than happy with that scenario. Yeah, so since these are, cost more than I sold them for, there's nothing to do here but sit and watch. If they're still in the money on Friday morning, then I will make a decision then what strikes to roll them out to, and try to see if I can get them to pay for themselves. I don't think I have any cash, right? Yeah, good. So all of these covered calls that I put on, since there's no significant downward price movement, won't be anything I need to do here. Yeah, really, everything just looks fine. Don't need to look at MSTY. Yeah, all these covered calls. I just opened yesterday. Not much price movement, so nothing to do there. And I have no cash, right? Nope, none to speak of. Got the one covered call put on yesterday. Nothing to do here. And this is why covered call selling is such a I don't know. I guess it's not low stress necessarily, but it's a low time sink. I'm just sneaking in here before the bell, double check and see if there's anything I need to tweak. But really, if you don't want to look at this every day, you don't have to. You can, if you're selling weeklies, you can just come in. Really, you could sell your calls on Friday or Monday and just come back on the next Friday, whatever, a week later. It's um it's pretty convenient. All right, quick check on this account. So my CLSK 9.5 calls, it's Wednesday and they're only worth $2. So this makes sense to close. I only have one. All right, we closed that. Just for shits and giggles, I'm gonna check my cost base. It's gonna be $10. To get my true cost basis, I would have to go and subtract all the premiums I got paid. And if you're new, you should absolutely do that. You should track your true cost basis. But for this scenario, I am totally fine selling a strike under my what Robinhood is counting as my official cost basis. So do I want to go? I can do 8.5, and if I prorate this out, this would be like collecting $14 for a full week since half the week is gone. That's not terrible, but I'm gonna get screwed on the bid-ask spread getting into this trade and back out. So, I don't know if I necessarily wanna try to sell this for 7, maybe actually have to go down to 6, buy it back for $1 on Friday, now my profit's only 5. So I may go ahead and just roll this out, and if I was, like, super paranoid about, losing money on this, I can just roll out to 10, to the $10 strike, 37 days out, nothing wrong with that. So, let's just give that a shot. Something like this, I don't have to look at for another 2 weeks anyway. So, let's see if I can get a fill here. Not financial advice for the people, but for the people who worry about, losing money on a trade, as long as I'm selling the 10 strike and I just sold it for 31, should be pretty close to my toss. Yeah. So, there's no way I can lose money on this trade. I can basically break even on the stock and keep and pocket all of the premiums that I got paid in between then and now. Nothing else expires. What, 27? The 28th is Friday? Yeah. So it looks like my wolf is out to 4-4 as well. That's fine. Now these $400 calls, these are for April 17th. Yeah, so that's like 50 days out. So there's nothing to really do here. And I don't think I have any cash to speak of. Nope. I could take my last $200 and buy one more 1080, but I'll leave myself a little bit of cash to actually close positions and whatnot. So I think I'm done there, but let's go back. I've got 9 minutes, so let's go back to the main account. Do I want to add some more leverage here? Just reload. If I sell 100 shares for 26 grand, I can buy 2 leaps, right? Where's my 200 strike leaps? Don't I have 200s in this account? Yeah, here we go. So the 200s are 106 each. So that would cost me 21, a little over 21. So I could form 2 more poor man's covered calls and have about 5 grand left over. All right, 100 shares. Goodbye. How many 200s do I have? I've got 2. I think I like the 200s. 0.77 delta, I think, on those. Yep. That'll bring me to a total of 4. 200 strike, they cost about 10. So as long as I sell the 300 strikes or higher, I should be good to go. But let's go to April 4th. What are the other ones that I have that are matched up with these? I've got the 325s. Yeah, I might as well just get the 325s and then it'll just automatically jump into this grouping. That'll work. Okay. Collected 1,800 bucks for those. So that leaves me with 6 grand to play with. Where's my Septembers? I can add one more of these 375s. Bring my average cost of these down a little bit. $3,000 left. What else do I have? September 1080s, right? Yeah, those are 600 a pop. So I should be able to get 5. Yeah, I went for the mid price there. Not gonna fill. Go tiny little bit here. Wait, did I even go up? Okay. That leaves me with 200 bucks. Somehow I still have positive theta. I wasn't sure if I was going to be able to manage that or not. Probably benefiting because these 4 250s are steadily getting more in the money. So they're not really losing much extrinsic value and gaining a little bit of intrinsic value, which is bad for me in this case, but not too bad. So the interesting thing is, let's just assume that March 14th is the springboard. How do I play? Do I continue to just sell weekly covered calls until March 14th or like right before that? And wow, and that's an expiration date too. Interesting. So I'd be looking to roll stuff here anyway. Wonder what it would take to just go completely long, like no covered calls on. My negative net theta would be pretty tragic. This number would be pretty bad from an option seller's perspective. Yeah, that would be ugly. We'll see. We'll see how the next 2 to 3 weeks treat us, and I'll make that call when I have to. All right. I like that. Added some long exposure, added some leverage, took off some non-leveraged shares in this, low price environment. IV rank's still pretty low as well. So looking forward to another one of these bad boys. Doesn't have to be this dramatic, I'd settle for one of these. We're at what? 76 30-day IV? Yeah, a nice 150 would do the trick. If we double our implied vol, I'll probably exit 80 to 90% of all of my leveraged long positions, and simultaneously, that will probably be my trigger to rebalance all of those profits into a Tesla position. I don't know if I wanna do 50-50, 60-40, 70-30, but especially if, if the market gods take requests, I would be more than happy with a nice strategy rocket ship. I don't know, Tesla and Strategy's charts look pretty similar. I don't think Tesla's trading like Bitcoin necessarily, or like a Bitcoin derivative. It's probably just macroeconomic stuff like, interest rates coming down and a little bit of optimism with a lot of people think that the market went up because of Trump, but I think the market probably would have gone up regardless, just from market sentiment. I don't know that it would have been as quite as bullish for Bitcoin necessarily. It might have even been more bullish because if oh man, if Biden administration 2.0 was going to have us fighting proxy wars, continuously fighting more in Ukraine, you got to print money for that. So no matter who's president, I don't see them stopping money printing anytime soon. There's really nothing they can do at this point. And even if they do try to save themselves by printing money to buy Bitcoin, that's kind of like, I don't want to say it's like a snake eating its own tail, but it's definitely going to be inflationary. So, obviously Bitcoin would benefit because they'd be printing money to buy it, but the fact that they'd be printing money makes everybody's money worthless anyway. So that's just, it's like double plus bullish, comrade, for Bitcoin. But yeah, if the market gods want to answer my prayers, they can continue to dump Tesla until I get my strategy pump. Like what was let's see. So strategy topped out on November 20th. Where was Tesla then? November 20th. So right there, I could have gotten Tesla for 340 and then it would have went to 5. And by then, wait, where's Tesla? Tesla December 17th. And then strategy December 17th would have come back down $100. And then they both just went to hell though since then. But yeah, a nice juicy cheap Tesla price would be quite nice. But that's so yeah, so that's my master plan is the next rally we get, all the leverage is coming off, all the longs are going away. Tons of covered call selling would go into effect if we get another one of these jumps in implied vol, and then rebalancing into a Tesla position. And it really won't matter what Tesla's price is, you know, if we get another rally like this into 500 plus territory, 750, 1,000, whatever, I will be rotating over into some Tesla positions. If that happens early enough in 2025, and then we get a big enough correction in the summer, I would probably be tempted to lever up again in time for, like, maybe an October another a second rally. That would be interesting, but, but by that point, just the fact that if I can exit on a nice rally, some positions, it might not be worth it to me to even risk more leverage. Straight shares might be the safer play for me at that point, but I'm not ruling it out. I am definitely, I'm definitely, putting a considerable wager on getting at least one more rally though between now and the end of 2025. So market just closed. No more trades. Let's check the chats. See if there's anything to talk about. Tommy, any concern of options market drying up and becoming more like Apple? No chance in hell. Um, yeah, there's just going to be way too much volatility with Bitcoin, and I don't see that I don't see that slowing down for 10 or 20 years. Like whether we get the demise of the fiat system or not, they are not going to go down swinging. So there's going to be a ton of speculation on the way up. There's going to be tons of pain and suffering on the way down. And some people are going to hodl through the whole damn thing. Some people are going to FOMO at the top and panic sell at the bottom. And there's going to be a ton of, some people are suggesting that this might be, strategy might be the shit coin, not necessarily because strategy is a shit coin, but just like the shit coiners tired of getting rug pulled on shit coins might be like, oh, okay, well, maybe I'll just come over here and trade strategy. So if they're a terrible shitcoin trader, they'll probably be a terrible strategy trader, and they'll just FOMO in at the top and panic sell at the bottom, if that's how they've been losing money in on altcoins. Um, but the point of that was, you know, there could be a lot of people entering the space that are not Bitcoin hodlers, and they're not sophisticated TradFi traders, and that combination of emotional low intelligence and and low skill in the mechanics could make for some bumpy ups and downs, and all of that is just going to make for one hell of a ride. So I don't consider the possibility of just like 12 straight months of just sideways price action and the whole options market dries up. There ain't no way in hell. I think before this most recent convertible bond purchase, I think we were at the lowest leverage that strategy's been on in quite some time. And so they're about to lever up. And so every Bitcoin swing is going to become increasingly swingier for strategy. Right now, we have just enough leverage to make us not trade like a Bitcoin ETF, I guess. So yeah, as long as Bitcoin tends to be volatile, strategy is hitched to that wagon. So unless you're comparing strategies volatility to the peaks, right? Like right now, it's downright boring compared to that. But compared to Apple, no, there's no way in hell. Um, if you want the Apple version of strategy, you can just buy Strike. Can you even get Strike on nope. Can you get it on Tasty? You know, if Strike was available, it's trading at 93. Yeah, I think that's even cheap. Like this be trading for 100? Wasn't that the conversion price? This just almost seems like There's no way this should be trading under 100 for very long. Um, but I regularly say that cash is trash, and I never really keep dry powder. Maybe a couple of $1,000 just to, you know, just to be able to close positions. That might be the most I ever carry. And I have caught a little bit of criticism for that. But like I was mentioning in 2025, I'm going to use Tesla as my trading pair, basically against strategy. So if I want to take profits in strategy, I can just buy Tesla with it. If they're both up, maybe that doesn't work. But something like Strike that offers a dividend, I basically think of Apple as like, they started issuing a dividend. To me, that's just like the death of any amount of options volatility or vitality that their company ever had. Really, I guess they could come out with something cool, but I think they shit canned their electric vehicle, and I just don't know if they have any good ideas left. So I'm hoping you'll have to wait 20, 30 years for strategy to turn into Apple. But if you want the Apple version of strategy, I guess you could just buy Strike, collect a little dividend, should be less volatile. Don't think there's an options market. I don't know if it ever will. After it's been on the market for what, a few weeks or months, they could start selling options against it, but I can't imagine it'll be very liquid or very appealing to me. But if they ever offer options on it, I'll definitely check it out. Magic Pete, adding leverage on down days gets real exhausting after the second week. I'm giving all she's got, Captain. Yeah, man. That's what I was talking about yesterday because on a year time frame, a 5 years time frame, a 10 years time frame, on an investor's horizon, not necessarily a trader's horizon, every dip is a buy, right? So if I go out 5 years, even buying the top here, you could just say, okay, I FOMO'd out. I FOMO'd into shares here at 100, but like worst case scenario is you were front running 2024. Right? Like, you know what I mean? If, as long as your investor's horizon is long enough, and that doesn't feel good here, but then 60 would be a buy, and 45 is a buy, and 70 is a buy, and 40 and 20. This is all pain and suffering, right? This is 4 years of just gritting your teeth and trying not to lose faith in your thesis. And then, finally in basically right around the halving of 2024, then you finally get rewarded and you're like, oh shit, I'm green again, right? When did it go over 100? Yeah, right here, March 1st. So if you bought the top in February of 2021, uh, and you diamond hands for 4 years, then you're good to go. Um, so yeah, buying the dip can be a little bit of a trap because you'd be buying the dip for 4 freaking years before you get your reward. I'm basically betting the farm that I don't have to wait 4 years to recoup buying in leverage at 250. So we shall see. Jay, I rolled February 2025 options to April. Okay. If you did that just recently, then that means they probably weren't worth much unless you rolled them earlier. Let's see. Oh, during the 2020. Okay, so you rolled February to April. during the 2024 Thanksgiving week. Okay, so that's brutal because if you had taken profits there, you'd be golden. But since you rolled them, now you're just suffering through the correction. I just checked how much they are down 99.9%. They're only worth 2K. Hope you guys don't make the same mistake. Yeah, that's an excellent point. And I definitely made that mistake in like 80% of my long leverage. So what would that be? 3 months ago, right? What have I had open for 90 days? Yeah. So when everything started to pump and the 530s were available before that, and then I think like the 6 and the 7s and then the 890s, these all became available. And I FOMO'd into these somewhere in November when we were getting that big spike. And you can see these are down. Well, if they were up, it'd be up 10x. So these got to be down like 90%, right? Um, I'm still not worried about these. Like I have a lot of heartburn around this position because this is not smart. However, giving myself these were leaps at the time. So there was like 13 months of time to be right on this. So even though I was catastrophically wrong in the short term, there's a decent chance to like break even on these things, which I would be more than happy. I'm not even looking to profit in these things. If I can sell these for 16 grand a pop, I'll be more than happy. And so that is another reason why none of my long positions are under 90 days. My call debit spreads were open 75 days ago. They still got 115 days left. 115 days left. 296, 324. I did just for fun. I opened a couple of those January positions just in case we had some kind of short squeeze or whatever. But it was a super, super tiny, like 0.5% of my portfolio maybe in those positions. So it was kind of like a lottery ticket type thing, just kind of for fun. I knew it was dumb when I did it. 142 days. I will roll these in 2 months. No, yeah, 50 days. 205 days. 205 days. But yeah, the this is probably the key to leverage is this implied vol chart here. When you get this implied vol spike, this is like, if you haven't figured it out, if the options prices are high, and it's not that implied vol makes options prices high, it's that high options prices is what makes the implied vol high. That sounds like the same thing, but it is kind of an important distinction. You plug the options prices into the Black-Scholes formula, and it spits out the implied vol. It's not the other way around. You don't put the implied vol in, and it spits out the options price. The options prices are determined by the combined buying and selling activity of all of the participants in the market. Everything else is kind of a set value. You've got theta, you've got delta, you got gamma, and you got vega. You throw that all into the formula, and I've never done it, but I hear that's how you calculate implied vol. That's the way that I understand it. And so, yes, hopefully none of us will be repeating that mistake. And when you have a super high implied vol spike like this could be the single metric that says, let's maybe not roll these up to higher strikes. Let's take some profits. And if you want to hold shares during this collapse, or during this correction, right? And the other thing is too, though, let's say that you had leverage and you took 100%, you sold all the leverage here right at the peak at 500 a share, but you still thought maybe it'll go to 1,000. Like, it's perfectly fine to just, s- you know, take profits on your long calls and buy shares with it, right? You don't have to have leveraged profits every time the price goes up. It's perfectly fine to just get 1x leverage on your shares going, if this did go from 500 to 1,000, you're not going to catch the top. So just, even if you exited at 350, that would have still been fine, right? If you bought long calls here and you exited here and you didn't catch the tippy top, like, come on, that's asking a little bit too much. And so if you still want to be long strategy, you can absolutely sell all of your leverage and buy shares with it. And then if you have to ride your shares down from 500 to, 250, those positions go down 50% instead of 99%, like Jay mentioned. So, yeah, thanks for sharing that, Jay. I feel your pain in a lot of these positions. So hopefully we'll all do better. Dude face Ivy will come back. I took in 6 more shares today with premium from options. Outstanding. NS number go up. W, is everybody have just one letter names today? That's just a prank. W, all right, made it live again. Bought some time. 2 was September and December's. Closed Marches that felt uncomfortable at the time to sell, but didn't expect sub 300. Yeah, I try not to expect anything. And really, sub 300, as soon as we saw that 500 was the top here, like anywhere in December, January, it's like, oh, okay. This could be a little bit of a trick here. December to January seemed like, oh, yeah, right. We got higher highs. I'm sorry, higher highs and we got higher lows. So it's like, oh, yeah, maybe we're back. Nope, not back. And so 289, that seemed like a reasonable correction. So it did seem reasonable that maybe the correction was over, because going from 500 to 289, that's almost 50%. But, if you go all the way back from here, if you say that, okay, we had 125, let's just say, and we got a 4x in 2 months from here to here, a 50% correction is like pretty routine, I think, to think that we wouldn't go down to 250, and really Bitcoin, I mean, strategies hitch their wagon to Bitcoin. So it's to an extent just a leveraged Bitcoin play. And if Bitcoin went up from 54 at the bottom to 105, 106, and we do 50% retrace, 50% of this up move. So 50% of a $50,000 move is 25 grand, which puts us at 80. So 80 would be a pretty routine correction. And I think Bitcoin is famous for like 30% corrections, which would put us closer to 72, which I hate to scare anybody, but that's the next support. The next support line. Like, we didn't hold on to 90. We've got multiple 90s here, 93, 93, 93. We didn't hold on to 90. There's nothing but air in between 72 and 84, really. So, with this not being my first Bitcoin cycle, And there's some people that I respect that don't even think that the cycles are real. I think was it Samson Mao said he doesn't think the cycles are real? I saw him get interviewed recently. But that bullish mofo is calling for 1 million Bitcoin in 2025. So I guess I'm not bullish enough. But yeah, so 30% drawdown from 100K Bitcoin is 70. And I know people are cheering because Josh famously called 84, but that doesn't mean that the market can't just be like, here, hold my beer because we're going to 72. And if we lose another, is that 15%? 10% would put us to 76. Yeah. So if we drop another 15% from here, strategy would probably fall another 25%, which would put us at, yeah, 200, somewhere between 200 and 225. I'm guessing we would hold on pretty well to 200, even though, yeah. So we topped at 170 several times. I don't know if the market can remember these tops, but yeah, I'm guessing worst case scenario is 180. Um, I hope like hell we would bounce off of 225 or 200, but it could get real ugly if Bitcoin tumbles. So, knock on wood or whatever superstitious thing you're into, let's not do that. Howard says, I've got no gut going forward. Closed all shorts today. I will live with the theta. Yeah, man, I have not I have not done that in 4 years. I have been collecting theta since May of 2020 in some way, shape, or form. And Quant Bros 1 shook me off of that absolutist position to an extent. Like, I never really owned long calls. Like, it was never a big part of my trading strategy, except buying the in the money ones to sell covered calls against and forming poor man's covered calls. Once I saw Quant Bros 1, I was like, okay, I am borrowing every cent I can get my hands on and just adding tons and tons of long leverage. And it's made it very difficult for me to maintain positive theta. Like on an account this size, and it's down like 60% from November. But the market's punishing me for quitting my job. It's like, oh, you think you got this made, huh? Let me put the fear of God into you. Um, but yeah, I mean, I should probably have 5 to 10 times as much theta value being collected here. And it's just very difficult to manage when I have all of these long positions. There's so much theta drain here. But I will definitely be watching like a hawk. And if we're still like hovering around 84K Bitcoin on the Ides of March, I'm gonna be like, okay, Josh, I'm riding shotgun with you. And maybe I would consider taking off a ton of my short positions. I don't know. It's hard for me to stomach though. My poor man's covered calls, the whole point of them is to buy the leaps to sell the call, right? So I've got $44 a day of drag to collect $130 a day on these poor man's covered calls combined. That's like 3 to 1. These poor man's covered calls. I've got $85 draining out. I got 185 draining in. That's maybe 2 to 1. And These, I'm barely breaking even on these. Why am I getting hosed on these so bad? Oh, maybe because oh, because these are the farthest out of the money. So these leaps used to be in the money when I bought them. These 300s, I bought these 300s when the price was like 350 or 400. And so now that they are, um, since now that my frickin' leaps are even out of the money too, I'm struggling to sell enough premium to cover the cost of it. So that's annoying. But yeah, maybe go for a couple of weeks in March. Just wait for a nice pump. But if that's the case, like if I take off these poor man's covered calls, I would be tempted. Yeah, in my mind, that's what a poor man's covered call is for. It's for collecting theta. So if I'm gonna close these mid-March, I would just YOLO into a bunch of the frickin' 1080s again. Oh god. Um, because I don't see the point of carrying in the money leverage. I guess it's a safer bet, but it's acting more like the asset itself. I guess it's still leveraged because I'm using half the capital to get the same price exposure. Yeah, you're scaring me a little bit, Howard. I'm thinking about it. MSTR Owl. All I have is July, September, and December 1080s. Yep. If we get a rally, you will be a-okay. If we don't, I don't think I have to say it. Dude face, you can swing between strategy and Tesla and a tax free and do quite well. Yeah, unfortunately, I only have this one IRA here. I actually just closed my Vanguard retirement account that I had with my job. I tried to transfer it over. I was gonna actually transfer it over to Robinhood, but I had a loan against it and it was giving me problems. So I just told him, "Fuck it." I paid the 10% tax penalty. I paid the loan back. That was like 20 or 30 grand. And so I didn't really I really didn't get much back from it. And yeah, I don't have a lot of patience anymore. But yeah, I can't wait to see what my taxes are gonna look like for 2025. And by can't wait, I mean I'm kind of scared. Tone, what's up, man? That's why I use something boring like Wells Fargo in place of cash. Yeah, and something that doesn't follow Bitcoin as my white powder or another stock that doesn't correlate with Bitcoin. Yeah, excellent strategy. I I was trying to think about that too. And that's why I was kind of thinking about Strike because Strike should be much less volatile. Like Strike might be a good place to store cash and then, like if strategy goes down 50%, maybe Strike only goes down 20% or something. I don't know. Plus, you can just be earning the 8% dividend on Strike. But yeah, that's a good way to do it. Just have something boring. And so that way, at least it might be at least keeping pace with inflation. Because if you go to cash, that's just, I mean, does anyone own strategy that has not heard Sailor say melting ice cube? Like, if cash is a melting ice cube, then it totally makes sense to get something boring that will at least like pace inflation potentially. Um, Wells Fargo probably has a dividend too, right? Just guessing. Don't all the financial stocks have dividends for the most part? Brennan says, I think we dip a little lower. Could absolutely happen. Howard, I was doing performance covered calls to lower my entry on the 200 leaps that I intend to exercise in December and January. I guess I'm just getting out of the way for a bit. Yeah. Yeah, the 200s. So you're looking to get in and have a 200 be your cost basis plus whatever you paid for them. And then are you going to hold them for a year and then potentially cash out? Because that's going to put you at the end of 2026. So the only way that you would be able to cash out at a profit would be as if we get an extended bull market, or the super cycle happens, or the 4-year cycle breaks, or whatever. Um, Otherwise, are you just holding shares for the long haul, like forever, ever? Tone, do it, do it YOLO, not financial advice, of course. PMCC, wouldn't they get wrecked when strategy pumps? Yes, absolutely. But that's kind of like the point. So let me just set this up. So if I was buying the 200 325s today, I remember that 200 325s. Oh, you know what? I could just put it into the options profit calculator. 200 performance covered call. I'm doing December 200s. And I'm selling, what is it, April 4th. Was it 325s? Yeah. Okay. Short-term memory loss. Wait, did I pick April? I don't think I did. No. April 4th. 325. All right, let's go up to let's just say we get, something super juicy. Let's say we springboard the ever living shite out of strategy. This trade basically caps out at a net like $4,000 profit. But that would be per position. So I've got 4 of these, and let's just assume that the profits will be similar here. So I've got 10, like 15 of them. So 15 times, 4 grand is decent. Yeah, so if I took a month off, I'd miss out on what, $1,000 worth of theta collection. It might be worth it. But yeah, if we get the prices that we're thinking about, every single one of these would get wrecked, and I would just, I would just take them off. But the thing is, we'd probably get, let's just say, let's map this out. Let's say that Josh hits it on the absolute fucking nail on the head, and March 14th we get the springboard, but we get another, let's just say we get another 4x. So it took 2 months to 4x here. I think over here it took like 5 weeks to 4x the position. And so if we're sitting at, if we're sitting at 250, it goes 4x, but it takes 2 months. I might get one roll before I decide to take these off. I don't know. let's see, by April 14th, if we're at something reasonable, right? If we're just starting to pump, yeah, if I got to pay 10 grand on the short call to roll it, there ain't no way I'm rolling it. I'm just taking this whole position off. Yeah. So it basically looks like in this poor man's cover call, the upside would be limited like 3 or 4 grand. But let's take off you know what? If I take this off, can I deselect it? I'm going to try to calculate without actually picking the covered call and see if it lets me. 200. No, what's all the fields? All right, so the long call. Let's see what those in the monies can turn out to if I just buy the December 200s. And I like perfectly time it. I close all these off, and then we go to the moon. Let's see. So by April, May, if we got back to all-time highs, 20 grand. If we get to 750-ish, 40 grand. That's like a 5x. $1,000 a share, 7x. So those are pretty cool numbers. It would give me a little bit of diversity as well because I've already got a metric ass ton of the 1080s. I've got some slightly out of the money 530s. I got the 890s. I got more 1080s. I got more 1080s. I got a couple 375s. I've got the debit spreads. So just having some in the monies, would diversify me into that position a little bit. But if I'm that confident in the in the rally, uh, to YOLO or not to YOLO, that is the question. Tone says confirms yes. Wells Fargo has dividends, so that softens the blow as well. But the dividends are taxable, right? Don't those get taxed badly? Oh, and did you say? Yeah, this is a taxable account. I think you said, right? Yeah, I think so. Howard says that was to exercise and get shares. Yeah, I'm totally gonna hodl shares through the bear market if it comes, and I'll be selling covered calls on them the whole way. I'm just gonna assume that the bear market is happening. 2026 and 2027 are gonna be down years, and I'll just be selling covered calls. And if we get the super cycle, then I will not necessarily get wrecked, but I will definitely be. If we get a super cycle, I will be limiting my upside. But it's more dangerous for me to not limit my upside. Right. Yeah, I'm sorry. It's more dangerous for me to not limit my upside and be wrong than it is. I'm fucking that up. Anyway, it's dangerous for me if I don't sell covered calls and the price goes down, than it is for me to sell covered calls and be wrong and the price goes up. Like if I miss out on unlimited upside after a huge 2025 rally, like that's not a big deal, if that makes sense. MSR Owl is using 150% call implied vol reasonable for my calculations. I think so, because right now it's like 70 or 80, I think. Oh, that's a couple days old. Yeah, 30-day IVs, 82. So double it. I think that's pretty reasonable. Log pilot, damn, I hate joining late. What's good, Soleil? I'm building up 410 December strikes. Grab 10 below $42 US. Looking to buy more in the 400 range. Do we like? Yeah, that sounds like the grain and Dan specials that they came out with, right? With the gamma delta curve. So if we get a rally, those should print. I mean, if we plug that in, December 410s. Yeah, I mean, as long as we stay out of the red, I mean, if we get any pump of consequence, I mean, those are printing money, so can't complain. Tone, yes, we like and repost log, like everyone should as a thank you for his time and teachings. Appreciate that, Tone. Go 50/50 YOLO or even 30. Yes, taxed. Yeah, I'm definitely waffling because if I take these short positions off, it kind of takes away my justification for owning the leaps. But the theta on the leaps is so small anyway. Just taking them off for a couple of weeks or maybe even a month just to see what's happening wouldn't be the end of the world. But see, here's the thing. I don't have money. The only way I get money is if I generate money. Um, so in March and April, if I got to pay bills, I got to sell something. So I either sell calls to make money, or I would have to sell. I don't want to sell any of my long calls because they're all fucking losers. Um, so I'd have to sell shares, which actually are slight losers now because I was buying um after the pump in March, you know, even into September and October as the price was going up. So I trade in and out of shares pretty frequently. So even when I took profits in November on the long calls, I bought, shares with those positions. So I've got a fairly high cost basis on my shares. So even if I sold, if I needed 5 grand to pay bills or whatever, I'd have to sell what, 10 shares, 20 shares. So I got to sell something. I can't just tell I can't tell my creditors and my mortgage company that my bad. Josh said that the price is going to go up in March, April. So I'm not allowed to sell any calls at that point. So I got to do something. I either got to peel off shares to make money or sell a call or sell my longs. I gotta do something. I gotta do something for money if I don't wanna be a homeless person. Deckard, if you had to start over selling options and couldn't use Bitcoin related companies, which stocks might you now look to sell calls on? The only the only other thing that I really have any faith in is Tesla and not Telsa, Tesla. Let me just see what we can get for premium. I haven't looked at Tesla's premiums in quite a while. So if I was going to run the wheel and I wanted to sell a cash secured put, let's see, 1% would be about $3. So 2% on a Wednesday, that's pretty legit. The premiums, what the frick? Hmm. So Strategy and Tesla are trading for roughly the same price, right? 290, 260. Selling a put on Tesla, I can get 650, but it's going to cost me 29 grand. Yeah, I can get 50% more premium on Strategy right now. But but this is not terrible. The premiums on Tesla are pretty righteous, to be honest here. Let's just say I bought 100 shares or whatnot, and I go out to, let's do 10% out of the money would get me to 325, right? So yeah, I could get 3% return on capital, a little more than 3% for 37 days. It's not quite 1% returns per week if I roll this every 2 to 3 weeks, but yeah, probably something like Tesla. And the reason I'm bullish on Tesla, uh, I guess they're technically still a Bitcoin derivative to an extent, but even if they sold all their Bitcoin, it wouldn't matter because I follow Saylor's investing motto that I heard him say in one of his interviews. You invest in an asset when it's number one, disrupting, and number two, the clear winner. So Tesla is disrupting the electric vehicle market. They've already done that. All of the legacy car manufacturers, maybe except one or two, are all going out of business in the next 5 to 10 years. I follow a guy's channel called Stephen Mark Ryan, YouTube or on X, either one, for my daily Tesla hype. So anything that I say, I'm probably just repeating whatever I heard him say in his video. But the gas car companies are going to have a bunch of mergers because they're going to try to prevent bankruptcies, and then they're all just going to go bankrupt. The car market in 5 to 10 years will be Tesla, BYD, a bunch of other Chinese electric car companies. I'm guessing Ford because they're the first to partner with Tesla and be friendly and like not be hostile towards Tesla. And so they'll probably license full self-driving from Tesla, and people who just love Fords will continue to be able to buy their Fords and have full self-driving capability. And I don't know who else is going to survive the carnage over the next 5 to 10 years. I mean, Ford probably goes bankrupt in 20, 30 years as well, but at least they can go bankrupt last. However, the electric vehicle sales is basically just like the appetizer. Once they get robotaxis going, they're going to put Uber and Lyft out of business, and it's going to make their electric vehicle sale. What does he say? Stephen Mark Ryan will say Their robotaxi profits are gonna make electric vehicle sales look like a rounding error, and then when they get Optimus in full production, the Optimus profits will make the robotaxis profits look like a rounding error. So, we're talking orders of magnitude of profits going from EV sales to full self-driving to Optimus. So, I don't know, 10x, you can probably expect a 10x price for each of those jumps. So, in 10 years, Tesla will be trading at 30,000 a share, split adjusted. I'm sure they'll split several times. So they'll probably still be trading at 300 a share in 10 years, but they'll have done two 10x splits, 10 to 1 splits in that time. So yeah, Tesla. What was the other one I used to trade? Palantir. I think, aren't they in the government's pocket? They're the ones that are spying on us. Definitely a part of the fiat machine, but selling a cash secured put for half a trading week. Uh, 1% would be 90 cents. So, like, yeah, it's a little over 3% for half a week. Is that right? Yeah. 10% would be $9. So, a third of that. Um, I don't know. Anything that's highly volatile. I mean, if the options prices are paying, that's what I'm selling options in. I think when I was trading Palantir, it was under $20 a share. Yeah. I haven't traded this one for years. Let me see my history. When was the last time I traded it? Yeah, August 2022. I was selling I was selling $10 covered calls. That's hilarious. Yeah, I don't know that I would be. Oh, that's why. So they've had a oh my god, they've had a huge pump. So that's why their implied vol is so high. Hmm. It did crash after earnings. February 3rd. Hmm. They must have liked something about that earnings call because the price has gone up 25% since then. Hmm. Yeah, I mean anything with premium, anything that's paying premiums, honestly. Even if I had to, I mean, any of the Mag 7 are probably gonna go up in value just because it's impossible to dethrone them, even though their premiums suck. I don't know, I guess I'd just own the Mag 7 and sell covered calls against them and buy deep out of the money leaps with the profits or something, or maybe Parman's covered calls. I don't know. Tone, I sell covered calls with a higher strike point, like 1 to 200 above market at 7-day expiration just to make some small gains in March. That's my plan. Trying to scroll up and see. Oh, the Poorman's covered calls. Yeah, so you're gonna wait? Are you gonna wait for, I don't know. What are you gonna when are you gonna jump back in? When we hit 500 a share or higher? What are you looking for? When are you looking to jump back in? Oh, so you're using MSTY for income as well. Yeah, MSTY is out trading me for sure during this correction. I'm getting curb stomped so far. Deckard, given there's a non-zero chance the bull run is over and that you have a metric ass ton of long calls, why don't you start stacking 20% of your premium in cash just in case? Um, I don't think I will ever own cash again. Like, other than just enough to pay whatever my monthly bills are, and, I would do something like, what is it, Jack Mallers? I think you can use Strike. I haven't looked into it too much, but you can just convert all of your money to Bitcoin and then just pay bills out of the account, I think. I haven't looked at it too much, but I would consider doing something like that, but I'm exiting the fiat world completely at some point. As soon as it's extremely convenient to do so, I will use someone's product to do that with. Um, so yeah, my dry powder will be in something that's not dollars. And whether that's something like a strike, so now I'm mixing up my terms. So the the Jack Mahler's company strike product where you can just stack Bitcoin and pay your bills with Bitcoin, I would do something like that. Or, something not volatile like strategies strike. Um, what are they called? Whatever they're called, shares, perpetual, perpetual shares. I would think about doing something like this. This should be way more stable and generates interest payments. But just selling premium to keep cash, I just I can't. I can't bring myself to do it. I assume it's a melting ice cube, and I don't want any of it. Emperor FOMO'd into the spot shares today on strategy. Just couldn't help myself. So far, green, green, green. Yeah, man. Fingers crossed. I'm hoping we all get green, big green, and I want it to happen sooner than later. I'm getting a little antsy. November felt so good. I just want to feel that way again, and I also want I want that opportunity for redemption, like not exiting all of my leverage here was just so wild. Like, how did I miss that? And it feels like losing the title fight. And I just want another chance to make amends to my portfolio. All right, we're all caught up on the chats. Be good, Joe.